Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to continue with my series about European ETFs that invest into real estate. And today it's going to go about the US ETF and two ETFs that invest into new economy sectors. So it's part 2 and US properties, and the other two are actually also global ETFs, just like my previous part, but I still put them separately because, yeah, they are a bit more special than the ones that I discussed in my previous video. So the real estate, as I went over this already in the previous video, I'm going to go over it quite fast. So you can invest into real estate by owning your own home, and that's really important, as I said in the previous video. You can also own multiple homes and then rent out those properties, but that's a lot of work. So then you can go to the stock market and invest there, and then you can invest into REITs or funds or in real estate exchange traded funds. And of course you have the different possibilities that they contain different REITs, they contain different funds, or they even contain other ETFs that invest into real estate. So that's an interesting thing to look at when you invest into funds. So the same can be said about the real estate funds, of course. And the performance of the global real estate, I'm going to go over this fast as well. So for the past 16 years, the global real estate market went up almost 100%. So that means an annual compounded interest rate of 4.4%, or annual compounded return of 4.4%. In 2018 till now, we actually had a 3.1 annual compounded return in the global real estate. And it's really important that I stress this one again, because it's not financial advice what I'm giving here. These ETFs, they only invest in one sector, the real estate sector. So it is really cyclical, and most ETFs, they don't include real estate. So sometimes it's mentioned in the name already, where it says excluding REITs, so AXL REITs, or excluding property, or in this description of selection of dividend values, that they say we look at stocks returning that amount of dividend percentage, but we exclude REITs. So if you want then to be invested into real estate because you want to diversify your portfolio with real estate as well, then yeah, you can go for investing into REITs, or buying a fund, or buying an ETF. And in this case, I'm going to discuss the ETFs that I found here on the European continent. In this video, it's going to be the IUSP, so that's US property ETF, and then we have two WNEW and the DTRE. They are from not on the SIX stock exchange, but on the London Stock Exchange. And the DTRE, I think you can also find in Germany stock exchanges, but the WNEW is only available on the London Stock Exchange, I think. So once again, the basic rules: the invested capital in the ETFs is always given in the currency that I found on the SIX stock exchange or the London Stock Exchange. The performance is always corrected to Swiss francs, because it's really important that we can compare apples to apples and not apples to pears. Looking at the performance of British pound compared to the Swiss francs, you will get different views then. and I don't think that's correct. So that's why I always corrected all the ETFs to Swiss francs. Always, so also these two I corrected to Swiss franc valuations to look at how they performed in the past periods. And the dividend yields are always calculated and given in the currency of the dividend itself. So the first one, it's the IUSP, and it's the iShares US Property Yield UCITS ETF with a total expense ratio of 0.40%, an Irish one. It's noted on US dollar, and it's currently trading at 28.12. And when I say currently, once again for this video as well, it's on the 28th of March, the end of 28th of March, the last trading day before Eastern that I took the data from. So it's important that you know that. The currency dividend is also US dollar. The holdings, there are 98 holdings in this ETF, and there is 428 US dollar invested into this ETF. Fully replicated type, I think this is really important. There was one ETF that I found that was also swap based, but I don't like these kind of ETFs that invest into Google, Apple, and then still give you the return of real estate. So I didn't include the swap ETFs. The past year it went up 9.65%. The past 3 years it went up 1.70%. And the past 5 years it went up slightly 0.04%. And if you saw my previous video, you know that the performance of the past 3 years and 5 years there was quite negative. So for the US property, it's not that bad actually. And I think it's the best return that you can find for the past periods. If you go to US properties and global properties and European properties for sure. And yeah, I need to stress this one as well. So it started in 2006. So it lived to see the years 2007 and 2008. And 2008 was a total disaster. So only up 40.76% in a period of over 18 years. So that's quite low. So once again, really important when you get into this market, and when you do, consistent investing into it is really important. And that's why my wife and I still don't do it, because yeah, we are investing into all the other ETFs that we have in our core satellite strategy. So we can't actually afford to have one entry point into the real estate sector and then having timed the market badly. Probably it won't be a bad time, because the Fed and the ECB are going to drop the interest rates normally later on this year. They should already have done it, but that's another video or another channel that you need to watch that, because I'm not going to give a lot of comments about that. But it gives 4 dividends per year in February, May, August, and November. A dividend yield of 3.35%, so not that much lower than the other ones, with around 3.50% there, the global dividend ETFs that I found. And yeah, quite even distribution across the quarters. And then we have WNEW. So this one is available on the London Stock Exchange and the German stock exchanges. The WisdomTree New Economy Real Estate UCITS ETF US dollar distributed. So the new economy, so they aim to invest into real estate that belongs to new economies that are rising and becoming more important. So I don't really like these kind of ETFs that really want to. So you're already in a sector, and then they want to specify even more. So you are even in a greater niche into a sector. So yeah, it's I name it for the completeness, but I don't really like these kind of ETFs. So it's in pounds on the London Stock Exchange, 16.40 pounds on the 28th of March. So also the dividend is being paid out in pounds. There are 50 holdings into it, and people agree with me because there is only 1 million invested in it so far. Okay, it's not been around that long, a little bit over 2 years, but only 1 million for over 2 years, that's not that great. And yeah, the performance as well, so 3 years and 5 years isn't there yet because yeah, it's only been around for 2 years, but the past year it went up 8.5%. So in that regard, it's not that bad. But being a sector ETF with a specific niche, I would be scared as well a bit. And it gives out 2 dividends per year. It's the only ETF that gives only out 2 dividends per year. All the other ones gives out 4 dividends per year that I'm going to mention in this series. And it's in January and July, and the dividend yield is 2.01%. And yeah, these are the distributions last July and last January. And then we have DTRE, only available on the London Stock Exchange. It's the First Trust Alerian Disruptive technology. So disruptive technology now, even more specific than the previous one, with a total expense ratio of 0.60, so also quite high. British pounds noted with 15.42 at the end of the 28th of March. There are 28 holdings into it, and once again, people agree with me, only 1 million invested into it. Okay, it's a bit younger than the previous ETF, but still also, yeah, just 2 years existing right now and only 1 million invested into it. So maybe they are going to close this ETF down. I don't know, but I wouldn't be that happy about only having 1 million invested into an ETF. You do have to, yeah, do all the paperwork, do all the investing, keep track of everything, pay the, yeah, the server space and stuff. So 1 million, just like the previous one. I don't know how long they are going to put up with these two ETFs. And the past year it was only up 3.3%, so even worse than the previous ETF. The previous ETF, the WNEW, still had a reasonable performance the past year, and then yeah, since its inception, minus 24. The other one was minus 16, so not great at all. And it says that it's paying out dividends, normally quarterly, but in the past 2 years, I haven't found any distribution, so it are all question marks, and the table of distributions is empty. So I'm giving it for completeness, but actually, yeah, I don't know whether or not I should show you this one, because it's actually the worst one that I can show you in this series. So we have the American one, only one. I think maybe there is only one because you have a lot of REITs on the US stock market. They are really popular, especially the Realty Income REIT is really popular because it's a monthly paying dividend stock. But yeah, with the price to earnings ratio of over 40, I don't know whether or not people are doing the right thing of investing their money there. But that's something else. I'm going to focus on the ETFs. And then we have WNEW with 1 year performance of 8.56. So that's still reasonable, and they are really paying out dividends. Not to say that about DTRE, so I'm not able to say that at all about DTRE because they are not paying out dividends, and the total expense ratio is also quite high, and the dividends per year, yeah, question mark. So with that being said, I thank you for watching this video. Please consider subscribing, hit that like button as well. It helps out the channel enormously, and I see you in the next video on my YouTube channel. Bye.